So what do you make, Selena, of this convergence in share price? We've actually got a chart to show it to you.
I think there's three main reasons driving this share price convergence. First of all, there's Alibaba's larger user base, higher margins, and larger potential for growth. This is really telling the bullish story of the Chinese consumers. I think investors are starting to realize that Alibaba plays a very integral role to the lives of middle-class Chinese consumers, whether that's through its digital entertainment platforms or through its shopping habits. And in addition to that, let's not forget, Alibaba makes a lot of money. Its net income far outstrips that of Amazon. Those higher margins are also driving this bullish sentiment from investors. And on top of that, investors see Alibaba as having a lot more white space than Amazon. Alibaba has been rapidly expanding in fast-growing Southeast Asia and other international regions, and not to mention rural China. This is a huge area of green space for Alibaba to push into and bring those rural Chinese online, driving Alibaba's bottom line.
Bob, is it fair to compare Amazon and Alibaba this way by looking at their market caps?
You know, I don't know. It's tough because, as Selena points out, I mean, really what we're looking at, this is sort of like comparing the Chinese consumer economy versus the U.S. consumer economy, because each of these companies are highly associated with the regions within which they play. They're compared because there are obviously similarities. The large e-commerce companies, they've made investments in entertainment platforms and services, so there are some interesting similarities, but there's a lot of regional specificity that each one has, and there are unique characteristics, on both sides. But the other big point that Selena made is critical is Alibaba is actually making some money now. Amazon is investing a ton of money now, and that's a big difference. Not that Alibaba isn't, they are, but not to the same degree, and so the bottom line looks much smaller for Amazon.
Now, it's interesting, Selena, we traveled to Beijing just a couple of years ago to speak with Jack Ma, and there was some concern around that time that Alibaba might be a lot of hype. What's changed when it comes to investor sentiment?
Definitely, investor sentiment has really come almost a full 360 degrees over the last few years. There were a lot of concerns about counterfeits, and late last year it was put back on the U.S. notorious list of counterfeit goods. On top of that, bearish sentiment really spiked several times over the past few years. There was the SEC investigation and outspoken words from very prominent short sellers like Jim Chano saying that the whole thing was a house of cards. Since then, Alibaba has consistently beat earnings and shown very impressive top line and bottom line growth. It's also come down very hard on cracking counterfeiters, taking down a lot of fake websites, as well as working with law enforcement to deal with that. That being said, there is some bearish overhang. The SEC investigation is still ongoing. A lot of investors and analysts admit that their financial disclosures are rather opaque, but the very impressive and compelling numbers are clearly asking them to overlook it.